What's up, you guys? Zoeb here from OneGlanceTrader.com, and in this video I'll be walking you guys through my top 5 day trading indicators. Now this is probably the most requested video or question I get on the channel, is what are the best indicators to use for day trading, and I plan to go through all of this in this video. And I thought the best way to kind of showcase this is through an example of a trade that I took a few days ago, and I wanted to record the trade live, and walk through the kind of analysis and thought process and talk through the indicators that I've got on my screen now. However, due to homeschooling and day job and all that kind of good stuff, I couldn't do it live. So what I've done is I've taken a screenshot of me placing the trade, and then I've got a screenshot of the outcome of the trade, and I'll walk through everything step by step. So what I'm going to do first is walk you through the indicators that I've got on the chart, on this screenshot that I've got, is what they are, how you can get them, and why I personally think they're important for day trading. And then secondly, I will walk you guys through the logic of this particular trade, why I went short, and the outcome of this trade. All I ask in return is that if you like this content, please subscribe to the channel, and please give this video a like. And if you guys want to comment down below on your favorite indicators for day trading, please do that, and let's have a discussion about it. So what we've got on the screen now is we've got the GBP USD 15-minute chart. When I kind of day trade, when I don't get a lot of time to day trade these days, I normally do it around the 15-minute chart, is because it's slow enough in terms of while I'm on Zoom calls for work, or I'm looking after my son during the kind of lockdown period. So the 15-minute chart is around the right pace for me. But again, the same logic will apply on the 5-minute, 1-minute, 15-minute and above. You can take these exact concepts that I'm going to walk you guys through and apply them to the 1 hour, 4 hour. Probably not the daily, based on some of the stuff I go through, but yeah, but you'll get the logic soon enough. So let me walk you guys through the 5 indicators that I've got on the screen now. The first indicator I'm going to walk you guys through is the ADR. Now the ADR means the average daily range, and again, this is one of my own personal indicators, so it's the OGT ADR indicator. Again, the link is below to download to all of these indicators, is all below, and I will also put a tutorial in the link below as well, so you guys can check that out in more detail. That goes through all the settings and how it works and the setup and all that kind of good stuff. But effectively what it does is it's the average daily range of a currency pair. So what this is saying here at the moment is that the ADR, the average daily range of the last 100 days, no, sorry, of the last 15 days, is 94 pips. So what it's done here, if I just remove this kind of line, which it doesn't allow me to do for some strange reason, erase all, that's what we wanted to do, is currently it's done 46 pips of the 94 pips, which is around 49%. And what it does here, it shows these 2 bands over here is in red, and what it does, it draws from the high over here, and also from the low. So from here to here is 94 pips, and from here to here is 94 pips. So what it's saying is that on average we're going to expect that this currency pair is going to move up to this level or this level here. And what this percentage movement kind of shows you is, of the current ADR of 94 pips over the last 100 days, how much of the ADR in percentage terms has it actually hit. So what it's saying is that there's a probability of 64% that the ADR, or 70% rather, 90 to 100, that it will hit one of these 2 bands. And these bands will move as time goes on, as new highs and lows are created, and you'll see this in the second screenshot, that the ADR bands will move to maintain the 94 pips distance from the high to the low. So why is this important? The reason why it's important is when you're looking to day trade, and depending on where price is at the current point in time, you want to know that your take profit element is still within the ADR. So there's still enough movement in there. And as you can see in this is my kind of entry line, and I kind of had my take profit down to here, which you can see is clearly inside these two bands at the moment. So for me, when I'm looking at day trading and looking at for a trade that I'm not planning on holding for more than a day, I basically want to make sure that the currency pair on average still has enough room to move. So for example, if price was here, if price was there and I was looking to go short with a take profit here and the ADR line was here, that probably isn't the best trade to be taking. However, if price was here and I was looking to go long over here, then the ADR is a great thing to use as a potential support level, because that is the average it's moved. And in my 5 pips a day trading strategy, again, I'll link to that in the description and in the top right hand corner, I use the ADR bands as a potential reversal point as one of my kind of day trading strategies. So that is why I use the ADR. It's just a visual representation for me that if I am placing a trade, where is price in relation to the ADR? So let me just erase all of that on there. So that's the first indicator. The second indicator is the classic OGT Trend Dashboard. And the Trend Dashboard, again, absolutely free, um, is effectively uses 3 moving averages, and based on their alignment, it tells you whether a time frame is trending downwards, trending upwards, or ranging, which is kind of considered from a grade perspective. And generally, when I trade, I'm looking for currency pairs that have a sea of red or a sea of green, and to trade with that direction. Now, you're probably thinking, hold on a second, Zeb, this is showing a lot of green here and I've gone short. Now there are reasons why I've gone short, which I'll go through inside a second. But what this does tell me, that if I do really want to go short, what I do is I change my position size accordingly. Now I've gone with only 0.03 lot size, which is less than a third of what I normally trade with. And the reason why I've done that is because I'm going against the long-term trend. And you can see here that the trend here, and especially all the higher time frames, are all in green. So at the moment, I've gone short on this currency pair because I'm going against the long-term trend. But I really like this setup. Again, I'll go through the reasons why I've decided to go short. But what I've done is, in case I'm wrong, I've adjusted my position size and my risk accordingly. So one thing that I teach and I mention a lot on this channel is, just because you're going against the trend, it doesn't mean that you shouldn't take the trade if everything else aligns. But what it does mean is that you should reduce your risk. And that's what I talk about in terms of my Confluence trading strategy. Again, I'll link to that as well in the description, so you guys can know you can adjust your risk accordingly. But generally, I will normally trade in direction of the trend. Like this day and this day were 2 good days for trends. And again, I would imagine that the M1 and M5 were also green as well. But that's why I think the trend dashboard's there. It gives you that forward-looking view very easily against that currency pair. And what I like to do with the trend dashboard is put all the pairs in on one currency pair as kind of like a dashboard kind of chart page. Therefore, I can quickly scan the charts and say, okay, GBP USD, AU USD, and Euro USD are all trending up or down. Those are the 3 currency pairs that I'm going to focus on for today to find an entry. So that's how I use it, and then I'll have this kind of set up on a chart to kind of walk me through that. So that's the second indicator. The third indicator is the OGT round numbers level, so which is signified by these blue dashes here. And what this is this is looking at psychological whole number round number levels of 500 and 100 levels. And I love this stuff on my chart because they are natural support and resistance levels that price needs to kind of break through. And that's because retail traders, institutions, banks, all these kind of good stuff, is they place stops and take profits at round number levels. Now, is hopefully now you can start to see when you look at this actual price chart here, you've got one here and one here, two massive resistance levels at this 500 level, and as you can see here, it's made a double top. Again, I'm kind of going into why I've gone short, but I want to show how I use this indicator. It's a good reference point not only for natural support and resistance, but for stop losses and take profit targets. And again, you can kind of see here where my kind of take profit is. Again, there's no surprises next to a round number level. So again, I love to have this on my chart, whatever time frame I'm trading, but especially on lower time frames because they give a good range for take profit and stop loss positioning. So that's the third one. The fourth one is the OGT pivot indicator. And don't know why I wrote that because you can't even read it. But effectively, what the pivot does is it utilizes the high, the low, open and close, and basically gives you a point in time of basically the average of like yesterday's price action effectively. And you'll notice in most of the time, and I've done a video of this and I'll link to all of this inside the description, that the daily pivot is hit 75 to 85% of the time. Yeah. And as you can see in these two particular examples, it hasn't hit that. And again, that is one of the reasons why I've gone short in this particular example. But for any day trader, especially if you're trading 15 minutes or below, you should really understand where the daily pivot is in relation to current price action. And again, it's no surprise that I've kind of gone short at the daily pivot, which again I'll go into a second. But again, for me personally, it's important to know where price is in terms of the daily pivot as support and resistance levels, as well as if the pivot is, we're really far away from the pivot in today's price action or miss pivots in these particular examples. We need to kind of know that stuff if we're going to try to day trade the market. And then the last one is just a band of EMAs, and I'll link to it inside the description of what the actual EMA periods that I'm using is. But they are Dial Guppy's kind of MMA moving averages for quote unquote long-term investors. And again, I've got a video on this. I'll link to that. It's got a nice little a section where Dial Guppy talks about it himself, because obviously I can't do it as much justice as him. So it's got a little segment inside that video. I strongly urge you guys to check it out. But what it does mean is it effectively just gives you a visual representation of direction of price. And when the moving averages in this particular example are kind of all aligning and all fanned out, and the bigger the gap is, the stronger the trend is. As you can see, that price has gone into the moving averages, but those moving averages are still staying aligned, meaning that the long-term trend is aggressive. So like a perfect example would be, if you're day trading, is finding an opportunity here, finding an opportunity there, finding an opportunity there, finding an opportunity there to go long. Now again, it's very simple, just using that. We had those things, and then we had the trend dashboard also confirming, and I think yesterday, probably, or the last 2 days, all of this stuff was green. There would have been nice little opportunities there to try get this pullback and get the high there, pullback, high there, pullback, high there, and all of that kind of good stuff. So again, very, very simple and a very visual representation. And when the moving averages are close together and contracting, again, that could be a pullback, or in the example that I'm going to show you guys is an example of a potential reversal. And again, when other things align, like double tops, miss pivots, all these other things aligning, gives you a strong probability that price wants to reverse, at least for the short term, for us to capitalize on that day trade. So those are the 5 indicators that I wanted to walk you guys through, and the reasons why I've got them on the chart. So hopefully that makes sense. If you've got any questions, please comment them down below, and all the links for all of these, bar the EMAs, which is standard on the MT4 platform, everything else you can download absolutely free. Link is inside the description. Now I wanted to walk you guys through of why I've gone short. So again, there's a number of reasons, and the kind of method I kind of use is kind of a confluence factor. So I'm solely trend trading and I'm solely counter trend. I do lean towards trend trading because I want to go with the trend, but I saw this particular setup and it's a perfect example of what I call the missed pivots rollover strategy, and I've got a dedicated video on this with loads of examples, but again I'll go through it in this particular video if you haven't seen that video. So the missed pivots rollover strategy is basically where we first identify a missed pivot or a number of missed pivots, which you can kind of see here. And generally when this happens, you will be in a strong uptrend or downtrend. So in this case, we are in a strong uptrend, which you can kind of see with the moving averages. As I mentioned before, they're all fanned nicely apart, and it looks so beautiful of this nice little uptrend. And what we then saw is as price came to this 500 level, it tried to push up higher, it couldn't do so, and then price started to go back down. And as it went back down, you started to see the moving averages compress close together. And then what happened is it tried again to push through this kind of natural support and resistance level. You had people taking profits at this high, and then what we started to see, if I erase all of this, is then we started to see it drop back down. And then when today's pivot got created, you can see here, if I just take all this back off, you can see here price hit the pivot. And it's key now to see what price decides to do when the pivot hits. It could continue to go down or it could continue to go up. So for me, this was a natural point of having a pause in the market to see what price wanted to do. And the reason why I like missed pivots is I said before that on the day they occur, they normally hit 75 to 80% of the time. And on days where they don't occur, within the next few days, there's a high probability that price wants to get to this level and wants to get to that level, because I don't know the stats, don't quote me on it, but there are probably less than a handful of pivots that have not been hit. Like, I don't think there are that many. There's a stat out there somewhere, I don't know what it is, but generally missed pivots or price wants to get back to a missed pivot level. So knowing that, and knowing that price tried to beat these highs and couldn't do it, we've got two missed pivots. We've also got a double top pattern. We've not broken out of the ADR. It's only done 50% of its average, and there's still room to go. My view is that it's going to go down, but I wanted to find a good entry price to get in. So what happened is price decided to go down, and as with every beginning of a trend, it started to go make a low, and then it's pulled back. We have the classic pullback. So you can see here I pretty much sold at a very small lot size because I am going against the trend at the actual pivot line there, with the expectation that this pivot will act as resistance, and then price will go down here. That's the theory, that's the logic based on everything I've just described. Now, if we look at my stop loss and take profit target, stop loss is fairly standard, just a little bit above those highs there, and I wanted to make sure that I had a one-to-one. Now, reward to risk is a very personal thing in terms of your own trading style and trading approach. For those who watch my content, you will know I don't like to go for big reward to risk, because I like to have a good win rate because I don't like losing effectively. So I've gone for a one-to-one reward to risk, and I made sure that the high over here was a one-to-one reward to risk to this line over here. Now, what I've done is I didn't want to set it at this level because we had this round number level just above it. And again, I didn't put my take profit at the round number level. just in case it didn't reach it. So I've tried to stack the odds in my favor that if price does want to get to this pivot, I didn't set it here. I set it just before that level there. So if I do get nicked on my take profit, which is great, and then price might reverse back up. So that's why I've put my take profit there. But I've made sure that the gap between here and here is at a 1-to-1 level. And that is why I have gone short in this particular day trade example, utilizing all those factors of indicators that I've just mentioned. And that's why I've also used those indicators. I've used the pivot and the round number to set my take profit, and I've used price action of most recent highs, and knowing that price has to get through the resistance of the pivot, the resistance of the round number level, and then has to take out these highs to get to my stop loss. So hopefully that kind of makes sense to you in terms of what the outcome or why I've placed this trade and how I've used these 5 indicators to help me analyze the charts and come up with this scenario of a trade. So what I'm going to do is just show you the second screenshot to show you how this trade kind of played out. And as you can see, it did close me out here, and it did, kind of nick the round number level as well, and it started to pull back again, utilizing that 100 level as a support area. So again, for me personally, again, even though I didn't do that much of a risk, am I disappointed I didn't put my full risk size on? No, I'm not. I'm happy the trade was a successful outcome, but there was a lot of things going against me, especially this massive trend, and then the higher time frames also not in my favor. So I didn't want to risk it. And these opportunities occur every single day. The missed pivot strategy is a great strategy for counter trends of when a trade is about to end, and I do less risk with it because I am going against the trend and it is counter trend. But it's so consistent. It's such a consistent strategy that that's why I love it. I love it because I used my take profit in my favor to do it not at these levels but slightly above it. It's just a great strategy, and again, like I said, it's all in the description if you want to look at more examples, and I go into this inside more details. But again, the key point of this video is to show you that you've got the ADR, the trend dashboard, the round number indicator, the pivots, and you've got the EMAs all working together in tandem to tell a story on how to day trade. Now, I've got a number of other indicators, not even talked about my OGT price action indicator, but I wanted to kind of keep this fairly simple in terms of not having a lot of things on the charts. Like, you may think that this chart is got a lot of stuff on it. I'm sure you guys have seen other things with Bollinger Bands, Ichimoku, and MACDs and all that type of stuff. All indicators that I use, don't get me wrong, but if you want the best 5 indicators and to have as clean as charts as possible to give you the long-term view, the short-term view, the volatility inside the market, and where we are against the daily pivot and natural support and resistance around numbers, this is the best indicators that you should be having on your chart. So I really hope you've enjoyed this video. I really like sharing this example with you because I think it's a great example to show what I'm trying to say. I've also got my playlist now of the my scalping course. Again, uses very similar thing, as well as my confluence trading strategy as well, that talks about reducing risk and confluence of different factors work inside your favor. So go check out those playlists now. Go download the indicators absolutely free, and I shall see you guys in the next video.